Good day everyone. This video is continuation of part 1 chapter 11 PFRS for small and medium sized entities. At the end of this video, you're expected to learn the following. To understand what accounting treatment we use to SMEs, simplifying methods for recognition and measurement and reducing disclosure requirements, provide distinct difference between the full PFRS and the PFRS for SMEs. Before we start, let's have a recap. Why was the PFRS for SMEs issued? The principal aim when developing accounting standards for SMEs is to provide a framework that generates relevant, reliable, and useful information which should provide a high-quality and understandable set of accounting standards suitable for SMEs. Let's begin the continuation in Section 18, Intangible Assets Other than Goodwill. We all know that intangible asset is an identifiable non-monetary asset without physical substance. No recognition of internally generated intangible assets. Therefore, charge all research and development costs to expense. Charge the following items to expense when incurred: cost of internally generated brands, logos, and mastheads, startup costs, training costs, advertising, and relocating of a division or entity. The PFRS for SMEs does not provide conditions for the capitalization of development costs. Sa full PFRS kasi kapag may certain condition na na-met, development costs may be capitalized. We use amortization model for intangibles and amortize it over useful life. Kapag hindi natin malaman yung estimated useful life, gagamit tayo ng management best estimate, but not more than 10 years dapat. Ang kaibahan lang nito sa full PFRS kasi require na at least at each financial year end, i-review if there are significant change, while in PFRS and SMEs, i-review lang natin only if there are indicators that there have been change. Next is the Section 20 leases. Leases are classified as either finance lease or operating leases. Finance lease if it transfers substantially all the risks and rewards incidental to ownership, while operating lease if it does not transfer substantially all the risks and rewards incidental to ownership. We can say that substantially all risks and rewards of ownership are presumed transfer if any of the following did. For us to clearly understand the two classification of lease in initial recognition and measurement, isa-isahin natin sa part ni lessor and lessee. Si lessor yung legal owner ng property or asset, then si lessee yung nag-occupy to that property. Unahin natin sa part ni lessee. A lessee under a finance lease shall recognize a lease asset and a finance lease liability equal to the lower of the present value of the minimum lease payment at inception of the lease, or fair value of the lease property at inception of lease. Initial direct costs of the lessee are added to the amount recognized an asset, while in operating lease, payments are to be recognized as an expense on the straight-line basis, unless payments are structured to increase in the line with expected general inflation or another systematic basis is better representative of the time pattern of the user's benefit. Next naman sa part ni lessor. A lessor under a finance lease shall recognize a lease receivable at an amount equal to the net investment in the lease. The net investment in the lease is the lessor's gross investment in the lease discounted at the interest rate implicit in the lease. In part of operating lease, sa lessor same lang sila ng straight line basis na ginagamit. Manufacturer or dealer lessor. A finance lease of an asset by a manufacturer or dealer lessor gives rise to two types of income, the gross profit and the finance income. Next is the Section 21, Provision and Contingency. Provisions are recognized only when there is a present obligation as a result of past events, it is probable that the entity will require to transfer economic benefits, the amount can be estimated reliably, the obligation may arise due to contract or law, or when there is a constructive obligation due to valid expectation having been created from past events. Here are the examples of provision that must accrue and provisions that may not accrue. Next is the contingent liabilities and contingent asset. Contingent liabilities, these are not recognized as liabilities unless remote. Disclose an estimate of the financial effect, indications of the uncertainties relating to timing or amount, and possibility of reimbursement. While in contingent asset, these are not recognized an asset, disclose a description of nature and financial effect.
Section 22, Liabilities and Equity. Ang liability ay isang present obligation of an entity which arises from past events and payment or settlement of a liability will result to an outflow sa entity na meaning an economic benefits. However, ang equity naman ay ang naglalaman ng investment by the owner plus addition to those investment na nanggagaling through profitable operations and retained for use in the entity's operations minus reductions to owners' investments bilang resulta ng unprofitable operation and distribution to owners. Instruments classified as equity. Putable instrument. Putable instrument is a financial instrument in which gives the holder the right to sell the instrument back to the issuer. Instruments that are subordinate to all other classes of instruments are classified as equity if they impose on the entity an obligation to deliver to another party a pro rata share of the net assets of the entity only on liquidation. Sa putable instrument, it is automatically redeemed or repurchased by the issuer on the occurrence of an uncertain future event or the death or retirement of the holder. Instruments classified as liabilities. First is if the distribution of the net assets on liquidation is subject to a maximum amount, a ceiling. Two is holder is entitled to an amount measured on some other basis, that is local GAAP. 3 is it obliges the entity to make payments to holder before liquidation, such as a mandatory dividend. 4 is a putable instrument that is classified as equity in a subsidiary's financial statements is classified as a liability in the consolidated group financial statements. And 4, a preference share that provides for mandatory redemption by the issuer for a fixed or determinable future date or gives the holder the right to require the issuer to redeem the instrument at or after a particular date for a fixed or determinable amount is a financial liability. Sa member shares in cooperatives naman, member shares in cooperatives entity and similar instruments are equity kung ang entity ay may unconditional right to refuse redemption of the member shares o kung ang redemption ay unconditionally prohibited by local law, regulation o ng entity's governing charter. Classification of financial instruments as liability or equity. As a rule of thumb dito, if the issuing entity is obliged under the terms of the instruments to settle the instrument by transferring cash, other financial instruments o ano pa, the holder thereof, regardless of whether or not the entity is under liquidation, ang instrument ay may kaklasify bilang liability at hindi equity. Samantala naman, kung ang instrument ay nagre-representa ng residual interest in the net assets of the issuing entity such that the holder thereof is entitled to settlement equal to a pro rata share of the net assets of the entity only upon liquidation, the instrument is classified as equity. Options, rights, and warrants. These qualify as equity instruments, so their present outstanding balances are presented as a part of the share premium. Capitalization or bonus issue, sometimes referred to as a stock dividend, is the issue of new shares to shareholders in proportion to their existing holdings. Halimbawa nito ay ang entity may give its shareholders one dividend or bonus share for every 5 shares held. Ang share split naman, kung saan sa pangkaraniwan din tinatawag bilang stock split, is the dividing of an entity's existing share into multiple share. Halimbawa ng share split ay each shareholder may receive one additional share for each share held. So in some cases, the previously outstanding shares are cancelled and replaced by new shares. Treasury shares. Treasury shares are equity instruments of an entity that have been issued and subsequently reacquired by the entity. So note that an entity shall not recognize a gain or loss in profit or loss on the purchase, sale, issue, or cancellation of treasury shares. Distribution to owners. Dividends declared shall be recognized as reduction in equity. And the property dividends declared is measured at fair value unless fair value cannot be measured reliably without undue cost or effort. The liability for property dividends is measured until at the end of each reporting period and at the date of settlement, ang entity ay kinakailangan reviewin at i-adjust ang carrying amount of the dividend payable para ito ay mag-reflect sa changes in the fair value of the assets to be distributed with any changes recognized in equity as a adjustment to the amount of the distribution. Section 23, Revenue. Revenue arises from the following transactions and events. Sale of goods. 2. Rendering of services. 3. Construction contracts in which entity is the contractor. 4 is used by others of entity assets, yielding interest, royalties, or dividends. Ang mga amount na nakolekta on behalf ng third parties such as sales, taxes, and value-added tax o tinatawag nating VAT shall be excluded from revenue. Sa isang agency relationship naman, ang agent ang nagre-recognize ng revenue only up to the extent of its commission. The portion collected on behalf of the principal is recognized as liability. Measurement naman is measured at fair value of the consideration received or receivable, taking into account any trade discounts, prompt discounts, and volume rebates allowed by the entity. So kagaya nga na nasabi ko kanina, yun yung measurement for the revenue. Customer loyalty programs. Sometimes as a part of sales transaction, kung saan ang entity ay nagbibigay ng maaaring points, loyalty awards sa kanyang customers na maaaring magamit ng kanyang customers in the future, which customers may redeem this to get some discounted goods or services or even having it for free. So kagaya nga dito sa example, which is if you would like to pause this video for a while to further analyze this illustration. So if you pause this video, let's go to the illustration. Illustration sale with customer loyalty award. ABC Co sells product X for 1,000 pesos. Purchasers of product X get an award credit that enables them to buy product Y for 200 pesos. Product Y has a normal selling price of 500 pesos. ABC estimates that about 60% of the purchasers of product X will use their award to buy product Y at 200 pesos. Product X has a normal selling price of 900 pesos after taking into account discounts that are usually offered but that are not available during this promotion. So dito hinahanap natin is yung sales revenue to be recognized immediately upon sa sale ng product X, and B is the deferred revenue relating to the customer loyalty award. So the solution will be the 1,000 pesos of the total revenue shall be allocated to product X and the award credit by reference to their relative fair values. So, The fair value of product X is 900 pesos, equal to its normal selling price. The fair value of the award credit is computed as follows. Normal selling price of product Y without the award credit is 500 pesos, minus the selling price of product Y with the exercise of the award credit will be 300 pesos. And that is the excess attributable to the award credit, multiplied by 0.6, which is the 60% estimated percentage of those who will avail of the award, which will result to 180 pesos, or the fair value of award credit. So the following, yung nasa ilalim nito, is the allocation of the total revenue, which you can see na lang and pause if you would like to further analyze it. Next is the Section 24, Government Grants. Government grants is the assistance by government in the form of a transfer of resources to an entity in return for past or future compliance with specified conditions that relates to the operating activities of an entity. So ito yung mga tulong o yung assistance na binibigay ng gobyerno in the form of resources such as pera and etc. to an entity in return dun sa kung ano man yung future compliance or yung paano man yung napagkasundoan ng entity and the whatever man sa government grants. So government grants exclude the following. A is government assistance that cannot reasonably have a value placed upon them. B, transaction with government that cannot be distinguished from the normal trading transaction of the entity. And C, income tax holidays, investment tax credits, accelerated depreciation allowances, and reduced income tax rates. Recognition and measurement. Government grants are recognized as follows. Grant. Letter A, grant that does not impose specified future performance conditions on the recipients is recognized in income when the grant proceeds are receivable. B, a grant that imposes specified future performance condition on the recipient is recognized in income only when the performance conditions are met. And last, grants received before the revenue recognition criteria are satisfied are recognized as liability. So do note that the government grants are measured at the fair value of the asset received or receivable. Section 25, borrowing costs. Borrowing costs are the interest or yung other costs. So ito yung mga interest at yung mga other costs pa na na-incur the entity in connection with the borrowing of funds. So this includes interest expense calculated using the effective interest method. B, finance charges in respect of finance leases. C, exchange differences arising from foreign currency borrowing to the extent that they are regarded as an adjustment to interest cost. So ang recognition ni borrowing cost is that lahat ng borrowing costs are recognized as expense in profit or loss in the period in which they are incurred.
Section 26, share-based payment ay isang additional compensation na binibigay sa mga employees. Ang motibo ay ang pagpapataas ng motivation ng mga empleyado para sa ikabe-benefit ng isang kumpanya. Meron tayong dalawang klase ng share-based payment, equity-settled at cash-settled share-based payment. Ang equity-settled madalas nire-represent ng tinatawag na share option. Ito yung nagbibigay kakayahan sa isang empleyado na makabili ng stock ng kumpanya sa specific time or specific condition. Cash-settled naman ay nire-represent naman ito ang share appreciation right. Ito ang karapatan ng mga empleyado na makatanggap ng pera sa taas nila may value ng isang kumpanya. Share-based payment with cash alternative provide either the entity or counterparty a choice of settlement in cash or in equity instrument. Fair value of equity instruments granted. A. Observable market price is available. B. If no observable price, use entity-specific market data such as a recent share transaction or valuation of the entity. C. If A and B are impracticable, directors must use their judgment to estimate the fair value. Section 27, Impairment of Assets. Impairment naman ay ang pagbaba ng market value na kung saan ang mare-recover na amount ay mas mababa na kaysa na saan nakalagay sa libro. Impairment of Inventory. The difference between the carrying amount and selling price, less cost to complete and sell shall be recognized as impairment loss. Impairment of Other Assets. The asset's carrying amount shall be reduced to its recoverable amount. The reduction is an impairment loss. Indicators of impairment. Nandito ang dalawang dahilan bakit nagkakaroon ng impairment. Number 1, external sources. Ito yung mga factors na nasa labas ng kumpanya na hindi control ng isang company. Internal sources naman, ang factor na galing mismo sa loob ng kumpanya kung bakit nagkakaroon ng impairment. Ito yung mga kayang solusyonan sa loob ng kumpanya. Section 28, Employee Benefits. Ito naman ay nahati sa 4. Short-term, Post-Employment Defined Contribution Plan, Post-Employment Defined Benefit Plan, at Termination Benefit. Ang short-term benefit, ito yung mga benefits na makukuha mo in less than 12 months like wages and salary. Post-employment benefit, defined contribution plan naman, ang benefits na makukuha at nakabase sa mismong empleyado. Post-employment benefit, defined benefit plan, ang benepisyo na makukuha mo pagkatapos mo mag-retire ay nakafix na. Termination benefit, ito yung mga benefits dahil sa pagtatanggal sa trabaho. May dalawang kondisyon para dito. Una ay dapat mismong kagustuhan ng kumpanya na matanggal ka. Pangalawa ay ang pagtatanggal mo sa kumpanya ay dahil sa offer ng company. Sa pagkakataong ito ay optional. Nasa iyo na kung aalis ka ba or hindi. Section 29, Income Tax. Current Tax. A current tax liability is recognized for the tax payable on taxable profits for the current and past period. If the amount paid for the taxes exceeds the amount payable, the excess is recognized as current tax asset. Deferred tax. Deferred tax asset is recognized for deductible temporary differences, including unused tax losses that are carried forward and tax credits. A valuation allowance is recognized for the amount not expected to be recovered. Deferred tax liability is recognized for taxable temporary deductible temporary differences, no valuation allowances. Section 30. Foreign currency translation. To record a foreign currency translation in an entity's functional currency, on initial recognition, record the transaction by applying the spot rate at the date of the transaction. An average rate may be used unless there are significant fluctuations in the rate. At reporting date, translate foreign currency monetary items using closing rate. For non-monetary items measured at historical cost, use exchange at the date of the transaction. For non-monetary items measured at fair value, use the exchange at the date when the fair value was determined.
Section 31. Hyperinflation. In this section applies to an entity whose functional currency is the currency of a hyperinflationary economy. When an entity functional currency is hyperinflationary, the entity must prepare general price level adjusted financial statements. IFRS for small medium-sized entities provides indicator of hyperinflation but not an absolute rate. One indicator is where cumulative inflations approach or exceed 100% over a 3-year period. All assets and liabilities not recorded at the presentation currency at the end of the reporting period must be restated by applying the general price index. All amounts in the statements of comprehensive income, statements of cash flows, must also be recorded at the presentation currency at the end of the reporting period. The gain or loss on translating the net monetary position is included in profit or loss. However, that gain or loss is adjusted for those assets and liabilities linked agreement to change in prices. Section 32. Events after the end of reporting period. In this section defines event after the end of the reporting period and sets out principle for recognizing, measuring, and disclosing those events. Una, ito ay nagbibigay ng katibayan ng mga kondisyon na nag-e-exist sa end of the reporting period. Pangalawa naman, ito naman ay nagbibigay ng hints or clues ng conditions na nakikita after ng end of the reporting period, pagkatapos ng pag-uulat. Adjust financial statement to reflect adjusting events, events after the balance sheet, date that provide further evidence of condition that existed at the reporting period. Do not adjust for non-adjusting events. If an entity declares dividends after the reporting period, the entity shall not recognize those dividends as liability at the end of the reporting period. That is non-adjusting event. Section 33. Related party disclosures. In this section requires entity to include in its financial statements the disclosures necessary to draw the attention to the possibility that its financial position and profit or loss have been affected by the existence of related parties. Disclose parent-subsidiary relationships, including the name of the parent and, if any, the ultimate controlling party. Disclose key management personnel compensation in total for all key management. Compensation includes salaries, short-term benefits, and share-based payments. Key management personnel are persons responsible for planning, directing, and controlling activities of an entity and exclude executive and non-executive directors. Section 34. Specialized activity. This section should be applied by small medium-sized entities involved in the 3 types of specialized activities. Agriculture. If the fair value of a class of biological asset is readily determinable without undue cost or effort, use the fair value through profit or loss. If the fair value is not readily determinable or is determinable only with undue cost or effort, measure the biological asset at cost less and accumulated depreciation and impairment. Determine an accounting policy that specifies which expenditures are recognized as exploration and evaluation asset in accordance with paragraph. Apply the policy consistently. Exploration and evaluation assets should be measured on initial recognition and cost. Tangible or intangible assets used in extractive activities are accounted for under Section 17. Service concession arrangement. Guidance is provided on how the operator accounts for service concession agreement. The operator either recognizes a financial asset or intangible asset depending on whether the grantor has provided an unconditional guarantee of payment or not. A financial asset recognized to the extent that the operator has an unconditional constructor right to receive cash or another financial asset from or the direction of the grant of the construction services. Section 35. Transition to the PFRS for SMEs. This section applies to a first-time adoptee of the PFRS for SME regardless of whether its previous framework was full PFRS or another set of generally accepted accounting principles. First-time adoption is the first set of financial statement in which the entity makes an explicit and unreserved statement of compliance with the IFRS for SMEs. Can be switching from national GAAP, full IFRS, or never published general-purpose financial statement in the past. Date of transition is beginning of earliest presented. Select accounting policies decision depend on circumstances, not pre-choice, but some are pure pre-choice. Prepare current year and non-prior years financial statement using IFRS for SMEs. But there are many exceptions from restating specific items. Some exceptions are optional and some are mandatory. In general exception for impracticability, All of the special exemptions IFRS 1 are included in the IFRS for SMES. Thank you for watching.